Hi guys, Piotr here, this is LiteFinance Global YouTube channel. Atlantic Ocean in a slow motion, and that's the only slow motion we are going to have today. Why? Because we are going to discuss very aggressive scalping and day trading strategy based on the Fibonacci levels. So without a further delay, let's jump straight into the video. Right guys, it's a revisit. We were discussing this strategy a little while ago, so it's good to refresh that one. It's good to have a possibility maybe to add some twists. So overall, when it comes to the FIB strategies, based on the books, based on the other videos, you're trying to buy the pullbacks, depends on and the strategy to 38, 50, 61.8 and stuff like this, the most common, the most popular. Of course, with that type of the approach, your stops is very wide. So in case of the good risk reward ratio, you have to target much higher levels. The thing we are going to discuss today is working on the medium short-term time frames, so it's good for swing traders, good for the scalpers and day traders, and that's the very important thing. Of course, as usual, you have to do your own homework, you have to do your own research. There is no holy grail, no crystal ball, and it's only hard work. If you are going to make over the hundreds of the examples, then you can decide if this particular strategy is going to suit you best, if it's for you or it is not. Well, because it's not gonna work for everyone, right? Because of the very tight stops, it could be some kind of the series of the losing trades, and that's what you have to understand. But the thing is that you are always trying to at least get 3R. So, well, it's gonna be enough to be 4 times out of the 10 on a correct way to be still profitable with this strategy. Of course, please like and subscribe. Leave the comments, questions below. So the overall thing which is very important here with what we are looking for is that we have to take out some major supply resistance levels or demand support levels, and then we are going to apply our FIB levels, and I'm going to share what kind of the levels we are going to apply. So let's say this is the this is the some kind of the demand level, because that was the bottom over here, and we take out the supply, so we went higher. And of course, you may try to filter this out based on the bigger time frame direction, for example, right? That could be one of your filter. But if that's happen from the intraday perspective, especially around the beginning of the European session or beginning of the US session or somewhere around the news announcement, that might be very useful for you. So in that case, we have the major supply taken out, and we are looking for a pullback, but we are not looking for a pullback down towards 38, 50 or 62. All right, we are waiting for a much deeper pullback, and I'm interested in the zone in between 78 and 88. One more time, 78 and 88. Again, I have to point here out that the most important thing is to make as many tests as possible, and minimum 100. There you go. All right. It could work well also with the manipulation. So as I mentioned, it's not going to work 100% of the time. it could work well with this type of the price action when we are, for example, creating the megaphone formation. But again, what is important here, what is very suitable for myself, from my trading perspective, is the tight stop, the level of the stop. I know in advance, right? So I can easily calculate my target and stuff like this. So let's have a look. Let's check a few examples. That's, for example, euro dollar, and what we have here within the first example. That's the first example, or number one. All right. So what we have strong run to the upside. All right. We took out quite few supply levels, pullback, and then another move higher, and that's significant development over here because we took out more supply. Right. Looks like the market may want to make at least maybe one pullback, 1 to 1 overall, right? But I'm still looking only for 3R at least. It depends how you wanna apply here. And well, what I have here, I have the run from here to here. Then I'm applying my fib levels, and I'm trying to trade. There was a possibility, most probably, if we were fill up here, good, but there was a for sure fill up here, and we never moved lower below the level of the last swing. 1 pip below is a stop, right? So in that case, even if we are going to take into the consideration, the higher level of the buying with the possible stop, right? So in that case, well, we might want to do that way. So that's the size, and let's make the measure. That's the one, that's the second, that's the third. There is a huge possibility we would be filled with the target over here with the 3R risk reward ratio. If you already have fallen in love with this strategy, just be careful. It's not going to work 100% of the time, but because of the risk ratio we are using here, we are, I would say, from the F1 language, in a pull position. So let's check another example, and another example is over here. We move strongly to the downside over here, right? So we took out this demand level, okay? We took out this demand level, we took out this demand level, all right? So I'm looking for a possibility to try to go short over here within the 77.88, and then again, very tight stop. That's the hourly chart. So it might look very tight, but to be honest with you, we are talking here about the 60 pips, all right? We are talking here about the 60 pip. And as you can see, we went even lower than 3R because that was the low. Another one, we were trying to run higher, and that's the very good example because we went higher, all right? If you are going to take this type of the move to the upside, there was a reaction within 77.88, all right? But then we would be stopped out, all right? And we were stopped out, for example, in this hypothetical trade. So the run higher towards 78, as you can see, bigger distance to the stop, and again, 3R being reached. And well, what was it? Let's have a look. This time it was over 100 pips on this 1 hour chart. Great stuff, right? So there was 3 trades out of the 4 profitable, quite good thing. So that's the euro dollar, and as you can see, I'm taking into the consideration only the last few trades before the market closed ahead of the weekend, right? Another thing, let's have a look what we have when it comes to cable. Even more examples over here. Just the last few trades visible for each of you guys, right? Strong Niagara Falls to the downside, trying to measure 88 being hit. This is the distance, easily 3R, even much more, right? There was a little bit of the demand here, right? So on the pullback here, we took out the demand. So I've been interested with another setup, another 88 and another Niagara Fall, all right? Another Niagara Fall. Then here, right, with this move to the downside, all right? Even if you take the trade over here, we would be stopped out, but then we would approach, based on what we've seen here, we would approach the last move, taken out the high, pullback, again 88, without the move below the stop, and boom to the upside. Another profitable trade, another move and take out the supply, pullback 78, move higher, another move higher, pullback not enough, 61, move higher, let's expand the fib, boom, 88 again, boom to the upside. Plenty of examples, plenty of possible trades over the course of the day. Try to use the majors. You don't have to chase the market. Again, some of the trades are gonna be stopped out, but because of the risk ratio, you are in a pull position with this particular strategy. Do your own homework, do your own research. It was a pleasure to prepare this one for you. See you around, take care, and goodbye.